from the heart of Dubai, where tomorrow is being built today, to the world. Welcome to the CTO Show with Mehmet. Here, we redefine technology and reimagine possibilities. With Mehmet, delve into the riveting realms of AI, cybersecurity, and digital technology. Experience the thrilling highs and lows of startups. Immerse yourself in the spirit of entrepreneurship and witness the future of business innovation being written in real time. Now, without further ado, let's tune in and explore the future.
Hello and welcome back to a new episode of the CTO Show with Mehmet. Today I'm very pleased, joining me from the West Coast in the United States, Alex Nocifera from Loma. Alex, thank you very much for being with me on the show here today. The way I love to do it, as I was telling you before we started the recording, I like my guests to introduce themselves because no one can introduce himself or herself better than themselves. So I'll keep the floor to you. Just tell us a little bit more about your background, your journey, and what you're currently up to, and then the floor is yours.
Cool. Well, Mehmet, thank you for inviting me onto your show. And, a little bit about me. Name is Alex Nocifera. I am a father of three crazy boys, a husband of just one. And I reside in Los Angeles, California. And I am, for professional purposes, an entrepreneur. I've launched, I'm on to my fourth venture capital backed financed company. And sort of in the spirit of segueing, and they're all rooted with technology that helps, sort of defend and accelerate and drive value to a constituent, from a product perspective. And that's it. So always, it's a tech enabled mission always with my four companies that I've built and sold in some cases, and still two of them are running. So that's a little bit about myself.
Great. And thank you again, Alex, for being here with me today. Let's start with Loma, right? So, and every time I've spoken to an entrepreneur like yourself or a founder, I ask the traditional question, what was the motive of starting Loma, and what challenges, problems you've seen in the marketplace that you said, okay, we need to start this to solve these problems. So would love to hear a little bit the background of Loma, Alex.
Sure. Mehmet, I have spent a deep amount of time with one particular constituent. So this constituent is, these are brands who operate storefronts. Pretty simple, right? Like, in the United States, there's about 3.5 million storefronts. And maybe some refer to that as offline commerce, and obviously the big trend over the last 10 plus years has been online commerce. But, still 3/4 of the GDP, economic movement in the US, still offline commerce. It's almost 75%. And I have spent close to 20 years helping these type brands drive consumers like you and I into these storefronts to buy products. Everything from food to household, products to services like going and getting a workout at a fitness center, but everything. And so how I discovered what Loma's building was in my last company, which is called fieldday.app, is a big 1099 marketplace of people who do marketing tasks. So everything from like handing out a flyer to handing out, materials, to making calls on the behalf of these type brands. Because again, it's always about trying to influence consumption in a geographic area. And so while I was operating field day, I really became intimately aware of a lack of systems to do their job. And this particular constituent within the brand is a marketer. And I just really detected that the marketer lacked systems and efficiencies on how they manage their sort of chaotic, decentralized, fragmented world. And when I say that, I mean, they had locations in New York and in LA, the Bay Area, Chicago, and in some cases globally. But they never had one central system to manage. And in the sales world, that's a CRM, it's a customer
Right.
resources management. But in their world, they didn't have that. And that was sort of the root identifier discovery that we wanted to go build software for this constituent to do that right there. And that's how Loma was born.
I like to hear these stories, Alex, especially, solving real challenges, real problems, and this time for marketers. Um, and this space have seen a lot of, I would say, evolution and a lot of, newcomers from technology perspective to it. So how have you seen, this, from affecting, I mean, this evolution from the trends that started to appear, like of course AI, automation, um and everyone who wanted also to kind of adapt a digital transformation, if the word is correct here. So how have you seen these trends, and how it's affecting that segment of the market, especially because they work on their brands and they need to get the best out of the technology. So what you can share with us about that?
Sure. So let's just think about this. Let's think about I'm the marketer, you're the consumer. And let's just
Hmm.
think about 20 years ago. So Alex, the marketer, is trying to influence Mehmet, the consumer. And you're in my area, you're in this geographic area, say you're in the Bay Area. And 20 years ago, the amount of information as a consumer, you as the consumer, the amount of information you were ingesting was literally a fraction of what it is today. So like the numbers are today, Mehmet as a consumer is ingesting over 10,000 impressions a day. Why? Mostly because this guy in my pocket, this mobile phone, is just this big fire hose of information. Okay. So as a marketer, I've got a really crazy hard job today to try to influence Mehmet because he's in so many places. He's not just, 20 years ago, I saw it about you in your car. So I thought I would buy radio and I would buy out of home media. And then I thought about you in the evening while you're in front of a TV set. So I bought some TV spots. And then maybe you were a newspaper reader. I mean, by the way, for the youth watching this or listening to this, they're like, who watches TV? Who drives? I take an Uber, and who uh, um, reads the newspaper? What is a newspaper, by the way? Right. But 20 years ago, those were the main buckets of where marketers spent money to try to influence Mehmet. That has dramatically changed. Like not just even dramatically, it's completely, been turned on its head. And if you think about it, if you zoom out, what kind of industries have kind of been built up? And it's almost to your point in your question of like, there's so many different things out there. Well, there was this market called advertising technology, AdTech, and
Hmm.
that's been built up. And there's what, in my opinion, as an entrepreneur, what that proved is there was very low bar of entry. So there was like a flood of like tens of thousands of companies that built advertising technology. And then once you had all that ad tech, on top of that became a layer of called MarTech, marketing technology. And there's a ton of companies in that. When I think about just from a venture capital perspective, money rushed into ad tech, money rushed into MarTech. And then once they realized there was very little to no defensibility on these companies, there were some historical wins. You could argue Google was part of that. I mean, the bulk of Google's revenue is through search engine marketing and search engine optimization. And, they bought a company called AdMob, which was ad tech with mobile. And all these industries got built, but what wasn't what we're focused on is building a layer that helps this constituent And again, this constituent is undercover a whale, meaning they're running big budgets. And these are multi-billion dollar companies that we're servicing. And they just didn't have a layer that helped them manage ad tech and help them manage the marketing tech chaos within the configuration of their system. So there's a real form factoring here that Loma um, sort of optimizes around. And the form factor is a storefront. Oh, and then there's 500 storefronts. So when you think about this like modular, like multi-node configuration, that form factor, it sort of becomes a layer in itself. And that layer in itself is really, we often call it, the system of record, or sort of it's become an operating system for brands with lots of storefronts. And that helps manage these large oceans of advertising technology and marketing technology. And I think that in itself creates a very unique, defendable moat, if you will, as a company that's building technology and building software for this, like, again, this constituent that operates multiple nodes in the offline commerce world. Does that answer your question, Mehmet?
Absolutely. And this is, I have a follow-up question, which is just popped out of my mind. Because you mentioned about, how things were done, and you walked us through, the revolution of, and no one can deny like what Google have done with the ad system in the search engine, and how they integrated it in the mobile by buying AdMob, and putting it even in our email systems and so on. And you talk, Alex, about something called last mile, delivery kind of the advertisement to the end user, which is me, you, everyone, right? Now, do you think the challenge is to know where I am now from? I mean, not location as maybe geographical location, as where I am, spending the most or the majority of my time. Am I spending it, for example, um, watching Netflix? Am I like doing it more as watching YouTube videos? Am I doing it outside? Maybe I'm not using it, the digital device currently, but still from a marketer perspective, and this is something I believe in, especially when we talk about brands and branding, that you need to put this in the mind of the consumer. And by the way, this applies to B2B. And I know maybe Alex, you focus more on maybe the B2C space, but even in the B2B space, I'm a big believer that the more we see the brand, the more like, we will remember it later. And then we will start to say, hey, like I've seen this before. I've seen it in the neighborhood. So walk me through this last mile delivery. If maybe I'm putting it in, you call it last mile advertising. I know this, but I mean, it's like very similar to the concept of last mile delivery. Like I want to make sure that my brand is seen wherever I am, whether geographically or whether digitally. So, like, tell me more about this concept, last mile advertising.
Yeah, Mehmet, and also just consider it's a really complex formula. Like there's multi-variables here. Like, yes, Mehmet is geographically somewhere, right? And then you have to account for, to your point, what is the device that's feeding them the information? It's mostly mobile. I would say, mobile is anchoring time spent on a screen. But what's happened with that, and I swear this is a whole nother complete other discussion topic that has so much depth to it, is just this notion of diminishing return. So if I bought ads on mobile, like again, pick your channel here, YouTube, TikTok, etc. I mean, the cost to get real estate right now is absorbently high because, obviously that's where the demand is. So ad dollars have like tidal waved over there. And so the cost and really what that presents, and that just sort of blows up a model because you start to put in your investment hat. And if everyone buys a certain equity, what happens? Price goes way up. And then all of a sudden you just start to wonder, because it drives the market cap way up. Well, am I going to get good returns? And that's what this is all about. It's about getting returns. If I put $1 in the meter, I need to get ideally 5, 6, 7 times return based on my margin profile, based on my ticket average and value, lifetime value of customers and all that stuff. So going back to your question, it's in this formula of last mile influence, right, is I know Mehmet's in a geographic area. That's pretty straightforward at this point, right? Everything's geo tagged at this point, right? And
Right.
people have sort of like become comfortable with just letting the world know where they are. And so geofencing is still sort of a massive weighted variable in this formula. But then I just start to get into other elements. Like I look at then go outside that mobile device. It's not that I'm saying mobile isn't a key variable in the formula of trying to influence Mehmet and consumption. It's just not the only variable, is my point. And again, when we look at last mile influence, we look at three core sort of disciplines. One is frequency. So kind of you wove into your question, what are the number of times I need to pepper Mehmet with to get him to kind of go, oh, that brand's in my area? I think the number is 7. So I need to get frequency. And by the way, for me to get you to see something 7 times might mean I need to hit you 70 times because maybe it's a 10% sort of influence ratio. So the second point, so first point is frequency. Second point is diversification. So now to this point of like, I need to hit you on YouTube. I need to hit you on TikTok. But let's also think about where Mehmet is. Maybe Mehmet goes into an office and we've now done some B2B advertising that influences the company to maybe let them know that there is a restaurant near the office that can serve them a healthy lunch. So we've actually built a channel that helps brands advertise the businesses in the attempt to influence their employees. So diversification. I'm hitting them on digital. I'm hitting them on offline. I'm hitting them on their mailbox as they go in and get all their bills and all the crap that's in the mailbox. We're hitting them in the mailbox. But the point is diversification. We're not betting on one horse. We're betting on 20 horses. Okay, so frequency, diversification. And then the third variable in this discipline is context. So there's a big weather system and it's pouring rain. Okay, there is a big event. There's a big holiday. There is something particular to this local market. We really empower and enable brands to leverage context in that sort of one modality of this discipline. So I can speak to Mehmet where he is because you know what? Context is king. If someone comes up to me and it's about trust, if someone comes up to me and has that local vernacular, they know about my community, maybe they know about, certain areas of my neighborhood. When I know that we're speaking that language, that is this massive opportunity to gain trust. And if the brand can gain trust, what it does is it helps effectively engage with one of those 7 touch points that they finally tip and go, I'll try this. Because that's what this is mostly about. The advertising that we focus on is mostly about new acquisition. There are plenty of channels out there that help someone drive frequency, which is like, loyalty channels. If you're a loyal card member of a certain brand, that's their opportunity to give you messaging that's trying to get you to come in more often. What the areas that Loma focuses on is try to influence Mehmet to come try that product once. And then the brand has built a product and a service that says, look, if I can get Mehmet to come in once, he's going to fall in love with whether our products or services, the value that we've developed as a consumer product. So I do want to stress, we do a ton of B2B, we do a ton of B2C. They all have the same principles at this point: frequency, diversification, and context. And that's the discipline that we feel is required, again, based on that 20-year trajectory of AdTech chaos, MarTech chaos. Now you need to build a layer that's form fit for marketers that operate lots of storefronts. And it really, to me, I mean, I don't know if it's coming off, it's still clear, but it's clear that there's so much noise down here that you needed to put something form fit for this type configuration to be able to kind of really clear out the noise and make sense of how to reach consumption and local last mile influence in an area where I sell product, where I have a service, et cetera.
And I think the consumers, they are aware of this noise and they don't like it, right, Alex? So I hear it from at least the people I know in in my circle. They feel like they are bombarded with nonsense campaigns, but they say sometimes we see something which is really tailored to us, something that really it's letting us feel like it's for Mehmet, or it's for Alex, or it's for, I don't know, right? So this customization, this is the way you can drive it to become more personal. It's key. And I think here where I want to understand a little bit from the nitty gritty, if I might say, from the technology perspective, like how much, like utilizing data and having these kinds of data driven guidelines, or maybe um, analysis that you can provide, to these brands, so they can, understand where, what, to whom they should do things.
So it's, again, that's in the spirit of this very complicated formula. And I think the complication is much to do about opportunity, right? In the spirit of this opportunistic formula, data is everything, right? So, if I spend $1 and I want to get 5 back or 6 back, I need to know in real time what what the discipline is yielding in returns, right? So it's, I think when we think about this like 20-year evolution and the opportunity to sort of like disrupt it, I think the mistake a lot of channels, not mistake, but the non-returning value proposition that I've heard for years from marketers. It's like, I don't care about shares. I don't care about clicks. I don't care about telling me your click-through ratio was 2%. What I care about is did it give me $5 back on my dollar spent? And so when we think about the first data-driven opportunity, it's clear-cut attribution, right? So understanding, again, remember, our constituent has a physical store. So in Loma's software, we ingest the data of that store, okay? And the two sort of variables that make up that sort of attribution opportunity are simply transactional volume and then the average transaction value. So I can tell you the number of receipts that were printed and the average cost of those, or the average spend on those receipts, okay? So that makes up sales, okay? So tickets and ticket averages. And so when in Loma's software, they go out and start to spend money across this diversified spectrum of channels, they're able to quickly see in the first day, first week, and obviously you can't expect, the world is going to get solved in a day or in a week, but you can start to see a behavioral change. And it's not about clicks and it's not about shares. And it's solely about, did more people start to come in and buy product? Okay. And that's the truth, in my opinion. That's what we're always talking about with our customers. Let's get to the truth quickly. Because by the way, if it's working, let's push a little harder on the gas pedal. If it's not working and you're not seeing an uptick, and the way you do that measurement and analysis is PPNOC, pre-post net of this controlled study. So like you could look at other units, other storefronts that are very similar in profile, or you could look at different time periods. And you can then start to say, all right, well, last week we did X, this week we did Y, it's up 5 points. Okay, good. But maybe there's an excuse. Maybe the weather was weird. All right. Now, how about last month and this month? Or better yet, this exact week with a storefront that's very similar that wasn't spending any marketing dollars. So you can do this attributable analysis in real time. And that's, to me, the game changer. Believe it or not, there are no systems out there that were doing this. And I think I know why, because the uniqueness of what Loma's disrupting here is when I said, we've sort of aggregated the ad tech options, is that's what we've done. And that hasn't yet been done in this multi location commerce world. And what we've done, Loma's done, is we've aggregated all the different options to reach consumers. And by building this marketplace of options, we come in as agnostic. We're neutral. We're Switzerland here. We're not here to tell you any one channel is better than the other. By doing that, it gave us a lot of leverage to go to the brand and say, hey, we need that sales data. Because I can tell you, as someone who has operated as one of those marketing vendors, when we went to the brand and said, hey, we need your sales data to tell you the truth, they're like, well, you're just one little vendor. So now Loma has come in as this agnostic aggregator, and it's enabled us to yield and plug into their point of sale data to get the truth. And that truth, again, will start to give you a story on return on ad spend, clarity quickly. So that's that first one. And then, by the way, Mehmet, you bring up such a big opportunistic point. Then once you can get into the context, and when I meant context, it's really what you said better, which was personalization on the local front. So we figured out in the first 30 days that we yielded a 5% uptick based on the diversification of channels that we spent on. But then what we did to further the experiment is we added a layer of personalization in the advertising that we went with. Say we said, hey, we're trying to go after a certain demographic. Say we're going after, tech professionals, and we started to layer in tech vernacular and context within the advertising message. Okay, now I can measure, once we added that, we were seeing a 10% uptick in traffic and maybe transactional averages on spend. And so you're now able to really fine tune the dials and really pull the levers or not pull the levers based on understanding the efficacy of your investments in a shorter period of time. And I think that, like, when I look back at the industry and this constituent not having these systems, I just think to myself, there's been a lot of waste in spend because they just didn't have the clarity of how their investments were yielding returns. And I will say what makes the most sense now, because that's this constituent I've always called this like battered, abused constituent, this marketer inside these type of organizations. And guess what? The data it proves itself. They're the highest churning role inside of these organizations. And guess what? Why? I mean, because they haven't had the systems to measure the efficacy of their ad spend and their marketing dollars that have gone to work. And that's almost like our core mission, is to help this constituent get better at proving how good they were at their job on driving ad dollars and yielding returns. But like, the last point to summarize, the data and the technology, like plumbing of this formula, is really the opportunity to do this at scale with quicker returns, quicker yielding measurement analysis and clarity. And that's, it's all rooted in, because I'm not even talking about the automation AI element, where, you're eventually going to be able to help predict and recycle good decisions into the system faster. And it's less to do about removing the marketer out of the equation, but it probably helped the brand need less resources due to the technology and the automation opportunity versus the way they've been doing it today with lack of systems, lack of it's all manual. And it's
Right.
like, to me, throwing darts in the dark of like, okay, let's throw 100,000 on this channel. But they really don't know what that 100,000 got in return. And that's to me, the holy grail of marketing, this sort of predictability of yielding returns.
Absolutely. And, I would say also, Alex, like, I think, what you're talking about, it proves itself, because I know, like, you work with um, large scale brands, and, some of them, they would have tens of thousands of stores as well, because you mentioned the physical stores aspect, which is, I believe, also it's very important. So my question is, and this is like a little bit more on running the business more than the technology itself, dealing with large enterprises. And I know, like, you deal with Starbucks, Walmart, and these big names in the US, and actually Starbucks and Walmart are known all over the world. So um has have there been any, like, operational challenges, to get the needs of these big names, and get them, signed up with you? I'm a little bit, like, curious about, this aspect of reaching out to such big giants in the market.
Yeah, I mean, I've worked with both Walmart and Starbucks in past lives, and I can tell you, they are obviously sort of the respected 800-pound, gorilla in their segment. And I remember I had this wonderful advisor, John Richards, who spent, meaningful amounts of time in the leadership group at Starbucks during their real steep growth period. And John was just truly amazing mentor and advisor on, always advising, just be careful what you wish for, because they are, they're going to big and they're going to sort of pull you into some certain needs that you might not be ready for. And it might actually disrupt what you're building in a larger, broader scale, meaning you're not just building a company for Starbucks, or you're not going to just build a company for one big. I know you want them, and that there's sort of like a sex appeal to having that big of a name in your customer portfolio. But I think as an entrepreneur, you have to evaluate if you're ready to dance with the big guys like that. And in the case with Starbucks, it was my first company, Ripple TV, and we had built a TV network for retail that helped them talk to customers inside of the store and help drive a new revenue channel through opening it up to local advertising and regional advertising. And we did it for every Seattle's Best coffee, which is Starbucks owned. Um, and we had a great experience, but I think we did employ some disciplines that made sure to guardrail them from, ragdolling us to doing whatever they wanted. I mean, we had at times say, no, that's not a feature yet released, and it's on the roadmap, it's coming. But it's discipline. And I think it's not a perfect science. It's a little bit of you as an entrepreneur understanding operationally your capabilities and your, the flex of where you could break, and having the discipline to tell a big customer that you're not ready to support that request or feature that they're asking for. Um, so it's totally dependent on where the company exists today. I mean, I will say with Loma in present state, we're working with some global brands, and again, it's because we were striking a nerve that helps them engage. And again, back to the point you made, is talk to the Mehmets of the world personally in a local market with some scale, measurability, and discipline on their own. And that I think we're still a baby company. We've got about 20 national brands right now, which I'm really proud of, because we are still a baby in the infancy stage, but we've captured the attention of some of these larger systems, because I actually do believe what Loma is doing and disrupting in the market is actually the value proposition sort of exponentially balloons at scale. So like the bigger you get, the harder this becomes and the less it gets done. And so brands, as they get bigger, tend to rely on some larger media sources that are less personalized, because it's easier to, put $1 million into a meter and spread this out with this broad, generic message. Um, and what we're trying to do is almost like flip that on its head and say, look, you could still spend $1 million and have the broad reach and reach volume, millions and millions of consumers, but still do it in a modular way where it remains personalized at the local level, to try to, again, speak that local language and yield that sort of personalized engagement, which is exactly what you said. As a consumer, that will crack through the noise quicker than all the generic messages that are coming in to your inbox or into your fire hose of media, that's hitting the mat.
Right. I want to shift a little bit gears here, Alex, and talk more about the entrepreneurial journey itself, right? So this is your fourth, VC-backed startup, and the moment when we get introduced, it's like really rare to see this, successful, serial entrepreneur like yourself, Alex. The initial question that came to my mind, why every time it was VC backed, or am I missing something? But because nowadays we've seen like the first time founders usually they prefer to go bootstrap, and then maybe on their second company, third company, they would go and raise money from VCs. So for you, it was like always VCs, right?
No, not necessarily. So it's a good question. And I think, when I think back 20 years ago on my first company, I needed capital because I was building a company that was hardware included. So what we were doing, we were putting up big flat screens inside of retail that we had to build our own there wasn't like a real form fit device that could slide behind the TV and power what we wanted to do at the local level. I mean, this was 2004 and 5, and believe it or not, like this smartphone wasn't there,
Yeah.
and they didn't have these small devices with cellular and mobile capabilities and all this stuff. So we had to build it. We built our own. And that took money. And the first money that I took in on my first company was not VC. So the first money was just what they used to call back then was friends and family.
Right.
And so I went out to friends and family and said, look, I've started this company. We're building a TV network. And thankfully, I was able to go raise $1 million in friends and family. And then we really started to gain traction. And guess what? Friends and family can't subsidize you any meaningful scale and traction. So we were forced into the venture markets. And I being here in LA, I can tell you in 2005, venture capital was not what it is today here in Los Angeles. So what it did is it forced me up into the Bay Area.
Mhm.
I could talk. I feel like most of the gray hair you're seeing here was from those days, because I would go to a VC in Los Angeles back then and talk about like the growth and scale opportunity. And they weren't true early stage investors. Nothing against them. They were wanting to, break down our financial models and stuff. I'm just like, look, there's still not enough revenue here or clay here to work with. It's really, we're getting the distribution. And then once you get the chicken, the eggs will come. And literally, I mean, I can tell you 6 solid months here in LA trying to raise money with VCs. 1 week up in the Bay Area with what they saw our story is, we closed millions in our what we then called a Series A, which today would be called a seed round.
Right.
Honestly, Mehmet, I probably more so philosophically as an entrepreneur like the bootstrap route. I think you build better companies when you have to do it on your own dime. But I'll try to do the quickest version of why I became more of a VC backed entrepreneur is, it's an early lesson from my father, which was OPM, right? Other people's money. And the whole premise of a VC is they're investing in disruptive entrepreneurs, right? So the whole reason they're investors. It's not, they're investing in nothing else. So why not get subsidized by them? And one might ask, well, you lose control of your company. Not if you design it right. If you design it right and don't raise too much too quickly, and you're sensible about the price of how you raise money. I mean, I see it happening still today. We're just, entrepreneurs, for whatever reason, want to raise at the highest valuations and show this like real illiquid sort of growth trajectory. But the reality is the game we all play is about liquidity and about making investors money and making employees money. And, if you're, the stories that we read about are usually the 1% of the 1%. And they're on this like rocket ship trajectory, and they're the, unicorn. They become this unicorn. But again, for you, if you're valued at $1 billion, the liquidity markets go real thin real quick. I mean, you're rather going to be a public company, or you're going to have to sell for tens of billions to get the returns for the investors who came in. And that just shrinks your probabilities of getting those people, these constituents, the investors and the employees, real meaning on the stock that they have in the company and the equity that they have in the company. So it's, I would sit here and say to an entrepreneur, if you can build without bringing in that outside money, ye I think you're gonna start your company better because you're gonna be more disciplined in how you spend money, how you hire people. I mean, it's gonna cost you more if it's your pain, not their pain at first. But then once you get to that intersection of, all right, God, we've got signal, we've got some product market goodness going on here. Now I want to gas it up a little bit and grow. I just think that's the most optimal intersect to go raise other people's money, which is to me the best, tech entrepreneur money is venture capital out there. And unless you've grown to enough point where you can unlock private equity and that's less dilutive. But either way, I'm not really one camp or the other. The only reason I have, and it's not fully true. My second company, so my first company did raise a lot of venture capital because we needed. We were a hardware driven. We had both venture capital and debt. But the second company, I really didn't, and I sold that company in 2012 to a public company at the time, Velasas, which is now Veracast. And I really never raised venture capital on that. I did that one all on sort of that bootstrap model. So company number 3 is still active, Field Day. We have raised over 5 million in venture capital. And then Loma has raised a little over 1 million in venture capital. And I am not here to go raise a bunch. I want to raise the right amount and give good returns to the investors who do come in, and give good returns to the employees who have stock that put in their life to build this company and grow the company like we're doing.
Yeah, because I'm into this nowadays, Alex, a lot. So just I like the way you described it on advising the founders when to go. I just had an episode released a couple of weeks back from the guest was Gagan Singh, who is the CEO of Wows Global. They advise founders in Southeast Asia on raising. He mentioned two nice things, which like really, when you were talking, it's like in sync. He was talking about two things that usually founders they need to think about: the track record and the traction, right? That these two T's. And for first-time founders, I know it's kind of challenge, and this is the route you took, Alex, which is like friends and family. We still call it this way till today, or angel investment, whatever you want to call it, is the right route, because once you have the traction, so this will help you even if you are not like if you are a first-time founder. So, but the people will start say, okay, they've built something, they have kind of product market fit. I would consider to invest in them, right? And now on the second time, so they have now the track record. So the traction, of course, still important, but they have the track record, which will help them. So what you just mentioned is exactly in the same, I would say, path of what I usually tell people to do, because uh, don't get me wrong, there are some people that they are, willing to take the risk even on a pre-seed round and put money. I mean, there are VCs who invest in pre-seed companies. They still have, just as an idea, they will build it. But I tell people usually if you are idea stage, go to an accelerator, go to incubator, and try to do things there. And, maybe you get some traction down the road and then you can raise VC money, because don't let us not forget that VCs is they are managing other people's money as well. So they need to, to understand and see you are capable of growing this business to the next level. But thank you very much, Alex, for sharing this. As we are almost coming to an end, Alex, any final, thoughts or final, things you want to share with us, and where people can get in touch with you and know more about Loma?
No, it's been an enjoyable conversation. Lomaplatform.com is our URL. We're always, I'm definitely always curious to talk to investors who might have liked something they've heard, even if they're, we're not today actively raising, but I know we will be at some point. So investors can reach out. It's Alex at lomaplatform.com. And if we have a brand who caught wind of our conversation, who's operates some storefronts, we would love to talk to them off, obviously, of course. And then the other constituent that we do serve is a marketing company that's trying to sell products to this constituent, because we have a marketplace and they could put their storefront, their offering and their value, their marketing technology inside our storefront, and it gets bought by these national, this US based retailers. And so I always think about the three constituents are, we've got the investor, we've got the employee, and then we've got the customer. And really in the same spirit with the employee, if there's any technology enthusiasts out there that have liked something they've heard, reach out. I would love to talk to you, about a possible role inside of Loma. We're always looking for people who obviously, grok the mission we're on. They believe that there's something broken and they want to help fix it, or, they believe in the local personalization, the last mile, and they want to take a role in trying to disrupt it and solve it. And, obviously we'd love to have those people on our mission with us. So going forward, but so thank you, Mehmet, for inviting me on. And I enjoyed meeting you and enjoyed the conversation.
It was my absolute pleasure. I believe very soon you would go international as well. I know like today you serve the US market, but I believe very soon you will go outside, right?
Absolutely. Yeah. I mean, I think, building them, when you think about how we built a marketplace in the US, there's a lot of sort of standardized, normalized elements here that enable us to do that. There's some like Moore's law elements here, because so if we were to go into an emerging market, another market, we'd need to make sure that they had a breadth of marketing technology vendors in there for us to sort of aggregate. And I think that's pretty much the case globally at this point. I mean, not some markets better than the others, but the answer is yes. I don't know if it'll be in 2024, but definitely 2025.
Great. So again, Alex, thank you very much for your time with me today. I know as a founder how busy things can get, and you took, this time to share your insights, your experience, and all, the holistic, I would say, approach about the next wave of this brand marketing and the platform that you have built with Loma, to share it with, enthusiasts, as you said, and marketeer, and, everyone close to your industry. So thank you very much for sharing this information with us today. For the audience, the website, the links that Alex mentioned, they are available in the show notes if you are listening on your favorite podcasting app. If you are watching us on YouTube, this will be in the description. And this is usually how I'll end my episodes. If you just discovered this podcast by luck, thank you for passing by. I hope you enjoyed. If you did so, please give us a thumb up, subscribe, and share it with your friends and colleagues. And if you are one of the people who keep coming back again and again, thank you for doing so. Keep sending me your suggestions, your recommendations. You don't like something, you like something. I would love to hear all the feedback from you. And as I say always, thank you very much for tuning in. We will meet again very soon. Thank you. Bye-bye.
Hit that subscribe button, share the show with your tech-savvy friends and fellow entrepreneurs, and leave us a review on your favorite podcast app. Your support means the world to us.